Welcome to Beyond the Press Release, a production of Gorecom, in which we take the time to speak with small cap executives after they put out important news. With us today, because he keeps making news, Jay Hutton, CEO of VSBLTY Groupe, trades on the CSC under VSBY. For our friends in the US, VSBGF, and for our friends in Europe on the Frankfurt Stock Exchange under 5VS. By the way, for everyone who was celebrating Memorial Day yesterday, we hope you guys had a great, safe and happy long weekend. And we had great stuff to talk about. For those of you to the story, and that's going to be a lot of you because the news that keeps coming out, VSBLTY is what I call a disruptive computer vision software company. Say it again, computer vision software company. They're using artificial intelligence and machine learning to transform the retail and security space. And effectively, what they're doing is turning all those static displays that we used to see into real-time, artificial intelligence-driven, living, breathing displays that are using artificial intelligence to act in real time about who's there, what to serve them, and at the same time, providing security. Never been done before. A lot of companies out there offer this, offer that. VSBLTY is the only company that combines the two. More than just lip service, here are just some of the deals they've announced in the last little while. We all know about they signed a major deal with Grupo Modelo, who's part of the Anheuser-Busch family of companies. That's for 50,000 stores to install and manage an in-store media network, which would be the biggest in the world. But beyond that, they partnered up with Embera, the world's #1 commercial refrigeration manufacturer. And what they're doing is turning those old refrigerator windows into displays. That's unbelievable. They're already got orders there. They're working with Intel and Ability Enterprise, a major company out of Taiwan, for intelligent cameras. And let's not forget little old Sensormatic, who's a Johnson Controls company with only a market cap of $50 billion. They've driven their relationship deeper with VSBLTY in order to bring a new level of what they call insights to help their retailers make better decisions by combining retail analytics with their data. It's unbelievable. There's so much more. That's why they put out a corporate update today. Jay, welcome back.
Thank you, George.
What a story.
Good introduction. Thank you.
Well, I think we need it because, most companies that put out a corporate update, it's like, hey, George Com sells widgets and we just want to update you that we're selling a few more widgets and we're trying a few more things. Great. But you guys have got so many moving parts that these corporate updates really mean something. So let's talk first about the fact that you're saying this is, before we get into specifics, there's been a major inflection in not only the core financial metrics of the company, but also the opportunities that are made available to you. You've already announced opportunities into real agreements. What more opportunities are you seeing, without being specific, that are starting to come to you as a result of what you've already announced?
Well, so first of all, let me reference the need for a corporate update. You're right. It's difficult for me sometimes to hear this, but it is a complex story. And there are a lot of moving parts. I'd love for it to be simpler. I'd love for it to be a single business, the George Com widget analogy. It's just not that. And, it might seem like there's too much going on for a small company. And there are days that it certainly feels that way. But at the end of the day, we have a single specific mission and objective, which is computer vision for both retail and security. So I pacify myself about the concern of, too many things by understanding that it's actually the same toolkit. Yeah. And it's important that I, as the CEO, spend time to sort of demystify that complexity, because it is not as difficult as it sounds. It is a complex story, but when you break it down, it's not so complex. So let me go back to your earlier question. We're happy that the Q2 has shown significant financial inflection. We knew it was coming, and we're delighted that we're now beginning to execute the way the shareholders expected us to do so. SaaS is that way. Software as a service is sort of month over month growth, and you have trailing indicators and leading indicators, and you sort of combine those two and you begin to communicate to the marketplace in a way that they can assess not only your real-time execution, but your projected execution. And that becomes, those are both balance sheet items. But what has it meant to us strategically? Because of the largesse, and not largesse, but the iconic nature of the ABI brand globally, the fact that they are in a relationship with us that is will be culminating very quickly here with the creation of a joint venture. That's attracting other participants to our story. If we understand that the store is becoming a well and truly bona fide media channel, then other companies that own significant retail are beginning to invest in that as a channel. What the Modelorama deal in Mexico has done for us, or in Latin America has done for us, is it actually asserts the convenience store, or the C store, we say in the marketplace, as a media channel. And so other places that have significant C store footprint are paying attention to that. So now we're involved in getting, we get pulled into conversations around that. It's a very, very large one, ABI. And, there are a few out there that sort of rival that in terms of size, but there's others that will impact our strategy and potentially balance sheet this year that are similar in terms of their driving metrics, but certainly smaller in terms of their scale, but still very, very large, right?
Would it be safe to say that it's put you on the map now as having a global reputation as a leader?
Yeah, from a software services point of view, I'm reluctant to say that we've got the ability to deploy in Europe or in Africa or in Asia. But with our partner base, and this is precisely why we built that partner base, Sensormatic, as an example, has active operations in 104 countries. So if we were to deploy, let's say, for instance, with a C store in Europe, we go immediately to Sensormatic as a deployment partner, or we go to deployment partners that we've lined up for Latin America, some of which we've not disclosed yet, and that's how we scale. So yes, global reach and global reputation, but because we've got these partners in place, now something even more beneficial, which is global execution. And I think that's the most important piece.
And I think this is the point where we have to emphasize, because look, in this first question, we've talked about Grupo Modelo, part of Anheuser-Busch AB InBev, Sensormatic, which is part of Johnson Controls. Do you think the market really understands yet the gravity of, and then you've got Intel along with, for the cameras. Do you think the market really understands yet that the biggest companies in the world, these are all names that we know, are all coming to visibility for you because of your software solutions?
Honestly, no, I don't think the market understands. And really, that's my responsibility, right? I've got to get out there and I've got to sort of demystify that, as I said earlier. And I'm trying to do everything I can to get that communication out there. It is meaningful to our organization that these guys have aligned with us. I think that it's reasonable to expect some level of execution before we get the full breadth of the impact of these partners. And we're in that execution modality right now. I think I may have mentioned to you last time, George, that even though our salespeople are constantly shaking the bush for new opportunities, our focus as an organization right now is on execution. It's not necessarily about creating more demand, even though you're always doing that. We would never stop doing that. The focus is on execution. If we just put the planes on the deck that are in the air on final vector, that's fine. We'll do that and we'll be fine. We're continuing to drive demand, don't get me wrong, but we have available to us at the moment the things that are going to cause enormous inflection, and you're beginning to see some of the impact of that in the CEO update that I shared this morning.
Right, and in that you said that second quarter bookings have already exceeded $1.5 million US, and that's with still a month left in this quarter.
Yeah, a month left, and like any company that's approaching the end of the quarter, there's always a mad dash right at the end to book everything. So I felt it was important to communicate the cadence of the organization in full transparency, and that's why we elected to provide the update, not only with respect to the strategic metrics, which are numerous, but the financial metrics as well.
And that's also because as a fast-growing tech company, your previous quarter is really a lag indicator, right? It's really a lag. It doesn't really reflect how fast you guys are accelerating forward, which is typical for all fast-moving, fast-growing tech companies.
It's particularly relevant in SaaS-based companies because it is where we were, not where we are, right? And so it's important to talk about that, but it's also equally important to give a real-time view, and we're trying to do that.
How confident are you in your goal of exceeding, or getting to $50 million US in annual revenue bookings for the year?
I'm extremely confident. There's always a light under the door. There's always a bit of a concern when you're in Q1 and you're projecting 12 months out. But I'm now considerably more confident than I was. Not that I was not before. It's just that that's a distance away, and lots of things can go on. But we're extremely comfortable with that bookings cadence by the end of the year now.
Well, given the fact that your software is being used to help the likes of Sensormatic and its customers make almost real-time decisions, it's almost in your, I wouldn't say it's easy. I'm saying this tongue in cheek, but it's not. Looking out to the end of the year actually is not that big of a challenge for you guys, because your software does stuff that's a lot harder than that at the end of the day.
Well, I mean, what makes it a little easier is these large partners of ours spend a lot of time and a lot of cycles on building the forecasts. And so we don't necessarily have to rely upon our own crystal ball. Every small cap company has a crystal ball. We can actually rely upon their crystal ball, which is supported by a lot of business processes that we don't have exposure to, right? Channel relationships, in-country relationships. So what's really unique about that Johnson Control deal, which was announced by them actually just a week or so ago, and then by us after, because it kind of blindsided us with when they went to market on it.
It's a good blindside.
Well, yeah, but they decided that it was material and relevant to their marketplace. They've enhanced their relationship with us, which is a real test. We knew it was coming. We just didn't know it was coming that day. But what they were communicating was that the retail location is now a reservoir of data. And their historical presence in creating and collecting data in retail is now being merged with our ability. So if you can think about what they do, which is point of sale information, transaction log information, and footfall, number of people, and then you collide that with VSBLTY's data set, which is about consumer engagement and emotion and gender and demographic, you've got an extremely powerful combined data set. That's the message of the Sensormatic press release, and watch for that to begin to resonate not only in their messaging, but in traction in the market.
And to give kind of an analogy for people to understand at home how powerful that is, I was thinking of a sports analogy. It's one thing before a game to have an idea of what your opponent's going to do, and in this case, customers aren't opponents, but just stay with me on this. To have an idea of what your opponent's going to do and kind of game plan for that. It's quite different on the field in real time to say, they're running that kind of an offense, that kind of a defense. This is how we adjust right now so we can win. That's what you're doing with Sensormatic, right? That it's the customers on the field when they're it's one thing when George goes to the store and he's thinking, I'm going to pick up a little bit of this, a little bit of that. But once George gets to the store and you see him on the field, that's where you have the best chance of impacting his decision and getting them to buy what you need them to buy.
It's a good analogy. In our marketplace, they call that domain shopper insights. So what can you do to learn more about your shoppers that will allow you to optimize their experience and optimize your share of wallet, increase sales velocity? And before, there were multiple reservoirs of data in the store, and now we're collapsing those reservoirs into a single database that can then have machine learning run on it and learn more about the experience. And the net is, I'm going to get 20%, 30%, 40% more out of per square foot of retail space.
Wow.
And that's the impact.
Wow. How big is Sensormatic? I don't think people know. I mean, we all know Johnson Control's name. They're ballpark $50 billion market cap. How big is Sensormatic in terms of their footprint? Is it global? I want that to people hear it from you. Is it a global footprint? And what's their customer profile look like?
So they're very focused on retail. 100% of their business is retail. They are JCI's retail business unit, formerly known as Tyco.
I didn't know
So
that.
they're,
I didn't know that
yeah,
that was the type that this is Tyco.
yeah,
Wow.
based out of Boca Raton, Florida. Their metrics are something like 185,000 discrete customers in 104 countries. They're enormous. They're the largest single operating division of JCI, as far as I understand, and they're very retail focused.
Wow.
They're the principal largest market share player in the loss prevention business. The loss prevention business is about collecting data for the purposes of shrinkage, identifying loss. That business is now being augmented by consumer experience, measurement of footfall, all the other elements that I talked about before. And that's the pivot that's going on in Sensormatic right now. It's quite fascinating. And the role we have to play is significant and embedded with them.
And one advantage we haven't talked about of all these relationships is that they're doing the biz dev for you, for them, obviously, but for you as well, because you're part of the solution. In your wildest dreams, could you have ever dreamed about how do you get to the AB InBev Grupo Modelo stores or Sensormatic's customers around the world? You'd have to spend $50 million to even think about even getting there.
Well, that was always the plan, right? So when we built our go-to-market, our strategy, we had identified from the get-go we were going to be an indirect model. So how does that work? We started with securing what we call reference wins. If you don't have some place to show where the product has been successful, you're not going to get anywhere. So we used those initial 2 or 3 years and the initial money we spent ourselves as founders to secure those wins. And then we pivoted. We identified the 4 or 5 critical partners that we wanted to have in our portfolio. And the proposition was simply this: we'll bring to you world-class software, cutting-edge software that does these things for your marketplace, and you will bring to us distribution and reach. No one uses this word anymore, but I'm old, so I can. We used to call it rails. We built rails. And, you know, millennials don't think in terms of railroads, but that's what distribution is. And so a principal benefit of the organization, VSBLTY, is that we spent the time to build the rails, to build the transportation network. And then once you build that transportation network, and that takes a few years, right? Because we didn't focus on building small spur lines. We focused on building national footprint transportation.
That sounds easy now, man, but that took a lot of guts. When sometimes it's easier to build small spur lines and just get a couple of quick sales and look good.
I can point to you companies that just did focus on a single retailer, secured significant initial wins, but now what? Now where do you go? Now where do you scale? We put scale as the first priority. And that meant we spent a lot more time in the non-profitable category than we maybe should have or could have. But I think it's the right priority because that's the only way where you get to scale. And you're starting to see some of the early manifestation of that right now, I would suggest. We're not done. We have to focus on execution. We have to still continue to do it day by day. But that was the plan.
And say it appears that the sales are coming. It just for you just using Ember, for example, or you have a quote in the press which says there's increased demand among leading consumer packaged goods companies to purchase. Now we're talking about the cooler freezer, by the way, for at home, that initiative, the cooler freezer doors as a media vehicle. We have received our first orders and the first several shipments of the technology will take place this quarter, Q2, right, Jay?
End of this month, yeah.
So the shipments are starting to actually head down those rails now.
Right. And we're, I have to be careful, but the cooler could be a nice little sleeper for us. We are now engaged in multiple CPG conversations. The cooler is an attractive landscape. It's 49 inches. It's big. It's physically big. You're talking about if I could use a shopper marketing term for a moment, FMCG, which is fast moving consumer goods. Everything that's in a beverage cooler is an FMCG. Those companies spend a lot of money on marketing. You think of the largest beverage companies in the world, not even wandering into the liquor category, which of course is equally robust.
Red Bull, Monster, energy drink. These guys spend all of us at home, if you're on Instagram or Facebook, you probably get inundated with these things. I see them all the time.
So the idea of extending media reach, multimedia media reach into point of sale, fantastic. And that's why it could be a really interesting sleeper for us, because as a reminder of what it actually is, it's large display, it's interactive touch, and it's measuring every moment of it. So not only would Red Bull, as an example, get a deployment in whatever number of stores where they're promoting their brand new energy drink, but they get real-time analytics as to how the audience is responding to that, which is something that they've never had before. And so they want to invest in it. They believe that it has good business modeling, bottom line impact, and they have analytics in the way that they've got it on the internet. And that inspires additional spend into this category.
Now, this may be my own bias because, I'm more old school and, growing up in these kind of stores. But to me, when I talk to people about visibility, I actually talk about, you say it could be a sleeper. I see that being as a massive potential upside, because that's just real estate.
Sure.
That right now is just dumb real estate that's got a sticker on top, that says, buy one bottle of Nestle water, get a second one for half price. And, they got to put this sticker, someone's got to send the sticker, and they're always changing that every couple of weeks. To me, Jay, I don't know if I'm overestimating it, maybe just my bias, but I think that's going to be a massive business going forward.
Well, we're delighted because Embera took notice. Embera has enormous reach. They're built and manufactured in Latin America. They've agreed to manufacture our component in their factory, which removes us completely from the build process, which is a software company. It's an enormous gift. And of course, they've got reach with the largest brands in the world. You can imagine who they might be. And they've not only agreed to sell that as a one-time offering, but they're also doing something called cooler as a service, which is instead of deploying it as a one-time cost, it's deployed month to month over a 36 or 48 month contract. So I do believe there's going to be some significant momentum from this category. And we had really lowballed the projections on that for this year because we felt it would take a little bit more time to sort of seed the initial deployments. But that could be wrong. It could move faster.
And I purposely not stayed away, but I purposely didn't want to focus as much on Grupo Modelo because we've talked about that a lot in the past. So I really want to talk more about Sensormatic and the other initiatives, but maybe just give everyone at home, because obviously I can almost hear investors with my flux capacitor in the future as they're watching this. I can hear them. They're probably asking, how's Grupo Modelo going? And I'm sure it's going fine, but we want to hear from the head honcho. How's that all looking?
So we're active and alive in Peru, Ecuador, Colombia, and Mexico. So production is continuing to deploy. We will be announcing a deployment partner soon once that's sort of locked and loaded, but it's critical for us to have that. Nobody believes for a moment that we're going to be able to deploy 50,000 stores in whatever number of countries ourselves. So I understand we need to message to the marketplace who that integration partner is. And then on the contract side, we expect to be finished our joint venture this month, and that will be announced once that's put to bed. We see zero risk associated with that. It's just the blocking and tackling of putting that together at the moment. And we had to incorporate a Mexican subsidiary and sort of the key elements to putting that together. So nothing strategically in the way, more just a tactical step by step.
Jay, fantastic corporate update. I love the fact how you covered off everything. And you're right. I want to go back to what was at the beginning. I want to end off with this. It may seem to some investors like it's like there's a lot going on, but at the end of the day, really, you're a computer vision software company that just has multiple applications. Right? You do one thing really, really, really well. And there are a lot of people coming to you and saying, hey, Jay, can we use it for this? Right. Hey, Jay, can we use it for that? But at the end of the day, you're not chasing too many rabbits. It's all the rabbits that are coming to you for your core technology. So is there anything additional you want your investors to know before we sign off, or or what you want to make sure they feel.
I appreciate that observation. That is how I come to terms with it. It's the same plumbing, right? So we don't drive our research and development crew in 1,000 different directions. They're building a single application set, and it is applied into multiple markets. And as we get more evolved, we spend more time on building components that are applicable for each of those marketplaces, and they can end up being small extensions on the software as it is. But we're very proud of it. It's gone through 3 complete iterations. We've just, for those of you that are interested, are moved into Linux now. We have a Linux supported version. So there's geeks out there that care about that. We certainly care about that. It lowers our cost of goods. And we're delighted that we're executing on some of the major components that we've got in front of us right now.
And the Q2 is ending in the next 30 days or so. So it sounds like we'll have a lot of reason to bring you back on. Definitive agreement sounds like it's coming. You're probably going to want to let the market know about how Q2 ended off. So can't wait to have you back, Jay.
Great. Thank you, George.
For everybody at home, you've been watching or you've been listening by podcast on Spotify, Google, Apple, your favorite podcast platform, to Jay Hutton, CEO of VSBLTY Group, trades on the CSC under VSBY. For our friends in the US, VSBGF, and for our good friends in Europe on Frankfurt under 5VS. For those of you who are coming to the story because of the last couple of press releases that have just come out, the number of press releases come out over the last several weeks, the best way to start your due diligence, get to Agoracom, get to the visibility profile. That's where you need to do step 1 there, because it's big picture, understanding what they're doing in layman's terms. And then step 2, get over the company's website, just link straight over there from Agoracom and do your deeper dive. Computer vision software, artificial intelligence, machine learning, verifiable agreements with some of the biggest companies in the world. You have all the reason to do your due diligence. We can't tell you what to conclude, but make sure you do diligence and don't say we didn't tell you so 12 months from now. Have a great day. Thanks for joining us. See you next time.